week once again. Bikaji Foods posted a strong third quarter earnings versus last year. I mean, it's a 16% rise in revenue on a year-on-year basis. EBITDA margins continue in double digits, aided by lower raw material costs. On a sequential basis, there has been a contraction, and that's what we want to understand. Start asking the management. Deepak Agarwal, Managing Director at Bikaji, and Rishabh Jain is Chief Financial Officer at the company. Both are joining in to take some questions. Deepak, great to have you with us. Rishabh, thank you very much for joining us. Deepak, if I can start with you, a Q-on-Q contraction in revenues. I mean, Q3 is festive, right? It should have been a pretty strong quarter, but on a quarter-on-quarter basis, there is a bit of a dip. Could you explain that?
Yeah, actually, if you see this time the Diwali was on the October, so mostly the sales happened in the September month and in the mid-October, and after that the lean period has started till the wedding season has over by the 14th December. So the volume is little drop, but if you see overall the growth is what we have other than sweets, then you will see 25% growth. In the revenue wise, overall we have a 16% growth, and the PATs and EBITDA are very good.
All right. Hi Deepak, hi Rishabh. So for this year you'll have done close to 1,500 crores. Just plugging in the numbers, you should easily do 2,000 crores for FY23. Is that doable? And the other factors for FY24, I think earlier the guidance was around 20% growth in that vicinity. So 2,000 crores for FY23 and at least 2,400 crores for FY24, doable?
So this is what we are gunning for.
Okay, all right. And what about on the margin front? You're at double-digit margins. Can you sustain it at these levels?
So see, largely all the raw material prices and packing material price are downward trend. Of course, so key commodities are at stable and they're not moving downward. But yeah, we are targeting double-digit growth, double-digit margins in next 4-5 quarters also. And we're trying to increase.
Okay, targeting double-digit margins. Got that. I guess one of the reasons, Nigel is asking you about that is because there's quite a bit of competition, right? From larger players like MNCs, from smaller local distributors as well. Rishabh, it must be a tough road to navigate. Has it gone up, the competition, and do you see any pricing pressure because of it?
So see, so Sonia, that's always there. So we are always competing with all the larger players from last many years. So that's a beauty of the business. So and that's where we always want to improve in overall efficiency. So yeah, we have competition, but we are trying to improve the same.
Okay, so this target that you've put out of growth of 20 to 25% in FY24, you hold on to that, right?
Yeah, we want to do that. I mean, we have increased all the capacity in last 1.5 years, and that's what we are trying for.
Okay, and what is your market share now currently in the core states that you operate in?
So largely we have increased our market share. So we are working on the data, but yeah, largely market share in all core states is plus 40. In Rajasthan is plus 40, 42, 43, 44%. In Assam, Northeast, we have market flow plus 55%. So we have very strong market share in our core market. We are largely number one in our core market.
Okay, all right, Rishabh, your market capitalization right now is more than 10,500 crores. So the margin for error is very, very minimal as we speak. 2,400 crores, around 240 crores of EBITDA, and a profit number of close to around 130, 140 crores doable, right, for FY24 as things stand?
So at 250 crore EBITDA, PAT will be close to plus 150 crore rupees.
150 crore rupees, all right, but still you'll be trading at more than 60 times. So the margin for error is very, very limited out there, but you're sounding confident on business. The other question I wanted to ask is, Deepak briefly mentioned about sweets. How much does it account for in the total mix? That's a revenue mix. And what's the target out there?
Sweet business. Sweet business in our business.
Go ahead. No, we missed that number, gentlemen. One of you will go for it.
So sweet business contribute close to 12% in our business, 12.5%.
And where is it headed?
So we are looking good numbers because it's a big category and we are trying to increase these numbers, and we are looking at the same growth in sweet segment also in the coming years.
As a foodie, Deepak, just on the lighter side, which was the top selling item for you in the third quarter?
Sir, always, as usual, the bhujia is the important one, but the papad is always selling more in quarter third and in quarter four, because in winter season, the papad, the papad and all varieties of, papads are selling more.
Right.
Okay.
Is there samosa on the offering, on the Bikaji offering?
Yeah, we have a dry samosa as in packing, and we have a frozen samosas as well.
Okay,
Okay.
Rishabh and Deepak, I think Prashant's hungry.
I'll just leave the studio, guys. I think we blame it on
Prashant's a bit
Deepak.
hungry this morning. Hasn't had
I love a good
breakfast yet.
samosa. So.
That was disappointing yesterday at PVR, actually. There was no samosa when I went for the movie. So,
Really?
yeah, even I was surprised. I mean, I had the other things because I love to eat, but yeah, there was no samosa there.
I mean, that's, I think it makes for great conversation, right? Food always a great conversation. Deepak and Rishabh, thank you very much for joining us. It's a pleasure. Thank you very much. And continue to, of course, wish you all the best. Very confident to grow the 150 crores and PAT nearly there in FY24. That's the guidance coming through. Revenues of 2,000 crores this year in FY24. On top of that, 20 to 25% growth in FY24. We'll take a quick break here. Bikaji is down about, 5% or so. 160 points lower on the Nifty. We're at 17,731. We are coming back with Shrikant Chauhan, who will run us through what you should be doing given the state of the market at this point in time, individual trades, etc. And of course, we'll cast our eye on